They just reported their earnings. The stock dropped. Oh my goodness gracious, they are negative 20% on a single trading day. Before the SaaS sell-off, they used to trade for a premium. This stock used to be $800 a share not too long ago in the distant past. Now, they're just above $300 a share. The crazy thing is, we went over this on the Compounder's Corner. I knew that they were going to crush it because even Adobe just reported their earnings and they crushed it and they also got sold off, just like NVIDIA. For NVIDIA, different reasons. Intuit had a triple beat. They beat on the gross sales expectations, they beat on their bottom line, and they even raised their full year guidance. But it doesn't matter because on a high level, their numbers, it might be phenomenal. If you read between the lines, TurboTax, for the first time in forever, they lost low income folks. And then number two, I think this is the bigger one. For me, this is what I think is the issue. I think with Intuit, it has come to a point where even if they put billions of dollars into R&D, it's not going to strengthen their economic moat. So consequently, they're like, well, we'll do something that might make the markets happy and pump our stock. They're laying off 17% of their employees. And you would think that's good news because now they don't have to pay as much, they get the same results, and so their net income is gonna get boosted. But the markets, they're smarter than that. They're realizing like, hold on, you're running out of tricks where the only lever you can pull at this point is firing your people to make your numbers look better. You guys might be toast. Because remember, TurboTax has now showed signs of slowing down and even losing customers. I really don't want to toot my own horn, but remember a few months ago I made a video talking about the SaaS landscape all the way from tier 1 down to tier 4. Unfortunately for Intuit, they live in the tier 4 landscape. And I went on record by saying that the tier 4 SaaS players are the most vulnerable to be disrupted by AI, where their business model could be in shambles, or they're going to just manage to survive. And then of course, for a select few, they should be able to thrive. So why mess around with tier 4 when obviously there's tier 1 and tier 2 that are also being sold off? This reaction, 20%, come on, that's a little harsh. And now I'm calculating and analyzing whether or not it's a buying opportunity. Is this one of those times where the markets just act emotionally to the point where they oversold a company where they'll have a rebound in the following weeks? Or should I stay the heck away? Because Intuit, for all we know, they could be $249 by the end of Q2.